Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Mayer with the Bulletin Board Heroes on Friday, the 28th of February, here on Share Talk and sponsored by the UK Investor Show. That's on Saturday, the 25th of April. Starting off, not too many heroes today, so starting off with an old favourite, especially as it's going up at the moment still. Biotrol said, I think yesterday, that it was looking for a decent clearance of the 3.5 pence level. That's always been resistance post September 2018. So end of week close today above that should get us up to 4.5 pence. And we're backed by the 50-day, 200-day moving average golden cross, which kicked in earlier this week as well. So something there for people who actually like seeing stocks going up or rather than down at the moment. Next up, a stock which has been in a great uptrend over the, I suppose the last 6 months or so, a bit more. We had the gap there above the 50-day moving average at the beginning of August and rising trend channel since then. I think the point to note actually is just the little shakeout that the shares had. And this is something that I've remembered from previous stock market corrections. Good stocks tend to just get overshoots to the downside and then straight back up again like a cork in water. And we've got a cork in water rebound for the shares here, which suggests that there could actually be more upside to come. That bear trap this morning down to 193, that was a bear trap from below the previous 200 pence floor for February, and the view at this stage is that at least while we remain above that uptrend line from August at 200 pence, the target here as high as £2.40. Ideally, in fact, there's no end of day close even back below the rising 50-day moving average at 207. Normally, a stock getting back above, closing back above a rising 50-day line is a bullish signal, as you can see. For instance, in the case of the October rebound that the shares had. Stock that's talked about all over the place on Twitter at the moment is Eddie Stobbart. Here you can see that hasn't had a great time in the recent past. It was obviously foreshadowing the calamities in the market as a whole. The only technical point of interest, or the main one, I suppose, is the way that today's intraday low, a bit like Convatec, today's intraday low was minor bear trap of yesterday's at 7.25, and then we pushed up quite quickly after that. Stock really in a 7 pence to 20 pence range, so you can take your pick there in terms of how much you want to try and get out of it if it continues to bounce off the 7 pence level. But the main point to note here actually is the way that the RSI is down at 6 out of 100, which is something which is very, very rare indeed, and is normally, obviously by definition, because it is so oversold, followed by a rally. We had a bit of that in June with the bounce from, sort of 60, the mid-60s to around the mid-70s, but normally you would expect rather more than that in terms of the percentage that you see from such a low base for the oscillator. I was trying to find another example, but really that was the example there, that there was a rally from that point a few months back. Couldn't really look at the heroes at the moment without looking at a Novacyt just to see where it is. It's a trading in wild swings on a daily basis. Plus point here is that yesterday's floor didn't actually go down to the support channel, the floor of the uptrend channel, the support channel, at 90 pence, which you could have done, so that was a plus point there. And the only negative today, I suppose, really the way that we've once again found this line of resistance from the middle of the month running through today's high at 175. So 175, certainly a level there. We can break that, then it's up to the dizzy heights of 250 at the top of the late January trend channel. Otherwise, still the door is open for a test of that support line towards 90p at the moment. And perhaps if you're squeamish about buying the shares or looking at the shares at the higher levels, that would be the place to check out. A lot of volatility intraday on the stock market and the futures markets, and that is traditionally good for the spread bettors. The one that seems to be benefiting at the moment is plus 500. It's rallied through its rising 50-day moving average at 891 pence. And while we're above that on an end-of-day close basis, looking for the top of last year's trend channel, currently heading as high as £10. Obviously, the situation supported by recent and perhaps ongoing share buybacks for the stock. Finishing off with stock which has not really been a hero. In fact, it's been the opposite of a hero in the recent past, but given that it's got such a battering from certain commentators, I tend to feel a bit sympathetic towards it. Situation at the moment is, if you are a bull of the stock, and that's why I'm trying to look at this now, there is some bullish divergence here in the RSI window between that low earlier in the month and the lower low that we've had, a narrowly lower low that we've had in the last couple of days. So the RSI remaining above the 30 level there. Probably, if you from a classical charting point of view, you want to see an end-of-day close or an end-of-week close back above the initial February support at 37.5 pence, which we may get today as the initial technical buy signal. And then obviously after that, then one would hope that the stock would at least rally back towards the downtrend line from the recent past, heading towards the 50 pence area. But obviously this is a stock in a severe downtrend, so the technical triggers may not necessarily kick in as some of the bulls might wish for. That's it from me today. More updates on Monday.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.